Hello folks, today we're very honored to have Mr. Victor Say with us. He's a very renowned and experienced fundamental trader and trainer. Yes, Mr. Guru, who trades practitioner. He really trades the FX markets. I think in particular really specialized in Kiwi and Aussie. Okay, good. So now the thing is that it seems like globally we are heading towards a stagflation, right? It's like a mix of inflation and recession. Doesn't sound very nice, like it's like very gloomy kind of a situation. But are we still able to tap on such opportunity to profit from the market? Maybe let's hear from the Guru, his view of how can we really ride on this stagflation to our favor. Victor, what's your view?
Hi folks. Zelda brought up an interesting question on stagflation. Okay, what basically stagflation is when you have a period of high inflation and a period of stagnant growth. That's why it's called stagflation.
Right.
Inflation, stagnant growth, or maybe even recession. Now, so if you look at all the countries throughout the world, US is actually the best position in terms of growth because, as you recall, the non-farm payroll last week was very strong. And they're going to get CPI today, which will show that inflation is still very high, but they also have very high growth. So many do not expect, and I also probably do not expect US to go into recession this year. So the US probably will remain steady, will be quite strong going over the next 6 months. But if you have countries like Germany or Europe for that matter, or even let's say UK, they are all having very high inflation and they are all going into recession. They are all going to have no growth. So that's why the stagflation will go, will be in those countries where there is high inflation and no growth. And inflation is an animal where if it starts, it doesn't go away very quickly. It doesn't mean just because I have one or two numbers, 1 or 2 months of slow inflation means it's solved. No, it will take probably another year to solve the inflation problem in the UK and in Germany, where inflation is running like 9%. In fact, Bank of England also looking at inflation at 13%, which means it's a terrible inflation.
Yes, very high.
Yeah, and on top of that, they're looking at 5 quarters of no growth. So UK is a good candidate for stagflation. Germany is about 9%, 9%. They're going to recession probably this quarter start over the next few quarters. So again, stagflation. So based on this scenario, the US dollar will probably be quite firm over the next 6 months. That's why, to me personally, Euro US is to sell, Sterling US is to sell. Aussie and Kiwi have to be a bit more careful because unless there is recession globally, and because they are commodity currencies, those two will fall, but less than Euro, less than Sterling.
Right, okay. So, economic-wise, it's like everything is getting more and more expensive. And we have since like lesser and lesser money to spend on things. Like this is where recession comes in.
Yes, good question. Lesser and lesser means the consumers. The consumer demand is getting weaker and weaker. To a certain extent, the US also suffer from that. They have this thing called consumer credit. There was a number, I think 1, 2, 3 days ago, which showed that consumer credit is going up, which means people are using their credit card to spend. They cannot spend, that means their disposable income is less.
Yes, okay.
So that part is also showing in the US a little bit. But one bright spot in the US economy is their wages have gone up quite high.
Okay, I see.
So last week when they had the non-farm payroll, it shows that their wages are running at 5.2% per annum. Okay, so which is quite high. Whereas in Germany, in the UK,